I guess let's stick with commodities then. We're talking about rice, but Manisha is here to talk about other commodities as well. Manisha, morning.
Morning, Prashant. Thank you so much for that. Metals on the radar because we have seen a lot of varied moves coming in for this one. If you look at the non-ferrous metals, well, there is a decline there. This is because of the strength in US dollar. Also, the US and China, the third round of talks now begins in this week, and there isn't too much positive going into these conversations, and that is weighing onto the prices there. On the other side, if you look at the steel prices, after China has come back after a week long of holidays, you have seen the steel prices gain up by nearly 3%. Also, the iron ore prices, well, they gained to an upper circuit, and we did see the prices hit a record high of around $96 to $97 per ton for iron ore. Of course, we have been following those news reports from Brazil on where whale has cut output. That, of course, seems to be one of the reasons. And it's also to do with steel, where you are looking at output curbs from China due to environment. That seems to be leading that metal on the higher side as well. Paul Bartholomew of S&P Global Platts now joins us to talk further about that. Paul, hi, good to have you. What is your sense, first of all, on the China participation coming back and the kind of run-up that we've seen in steel and iron ore prices today?
Hi, yeah, no, it's an interesting time because obviously the Chinese market has been sort of closed for about a week with Chinese New Year holidays, and we think this week will probably be quite quiet because typically the market drifts back quite slowly from the holidays. But in the meantime, obviously iron ore, as you mentioned, has climbed up to 94 and above, really on supply fears caused by the incident at Vale in Brazil. So expectations are that steel prices will rally once the market sort of picks up again this week. They kind of have to really on the back of high iron ore prices. But as for the demand end user picture, that probably hasn't sort of changed too much. But be those iron ore prices will flow through into steel prices, we expect, and the market will obviously look for excuses or at least look for reasons to lift their prices in the coming weeks.
Sure. Paul, would you say that much of the Brazil accident now is in the prices, or do you see further gains in iron ore and steel going forward?
I think the market's still sort of coming to terms with it, really. I think I've seen sort of figures of a potential sort of shortfall of maybe about sort of 30 million tons or something like that. But I think probably a lot of it's been. I think it's being sort of priced in. I mean, that doesn't mean to say that it can't sort of continue climbing further. The other thing that happens as well is that Q1 is typically a sort of weaker month for exports in general because of the weather in Australia and the weather in Brazil. So generally speaking, supply is shorter, and that's been compounded obviously by the Brazil accident.
Paul, one more question, and this really is about the US and China talks that begin yet again in this week. What is your sense? How are you getting into this, and how are you putting the metal prices forecast on the back of this?
But I think the market's sort of getting a bit used to these sort of talks. Unless there's something particularly negative that comes out of it, I don't necessarily see any great. I don't see the market necessarily, responding to these talks too much. They'll probably be a bit more focused on this sort of iron ore situation at the moment. But I think at least the two sides are talking to each other, and the situation's not necessarily sort of getting worse. But I think at the same time, the market would like to see some more concrete signs of progress for sort of prices to perk up a bit. But while they're talking, they're not fighting, I guess. So
unless that happens, you don't see a buy really coming in for the metal prices.
We'll have to see what happens sort of, when the market comes back. I mean, when we're looking at some of the downstream demand, we expect to see infrastructure in China sort of picking up a bit in the first quarter. I think there are already some signs that that's sort of starting to flow through. We see real estate. We don't see so much, or property construction, I should say. We don't see too much growth, or not to the same extent we had last year. But there still should be some residual support. I think the thing to watch out really is whether China's going to start lifting its steel exports again, because that obviously has an impact on global prices.
All right.
Okay. All right, Manisha, as well as Paul, thanks very much for joining in and taking us through your view on the commodity space. We need to take a break, but watch out for stocks such as Graphite India. That stock is now down 10%, and PC Jewelers also, which is showing a sharp cut of around 10% at this point in time.